This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
Welcome back to TradeFlow TV. You know the drill? Markets move fast, and if you are not ahead, you are under. It is Tuesday morning, 2nd of June, 2026, and the geopolitical optimism that carried us through May is officially crashing into a wall of reality. Let us get you caught up for the opening bell. First up, the 60-second macro and crypto flash. The ceasefire unravels. The highly anticipated US-Iran ceasefire is actively falling apart. Both sides exchanged military strikes over the weekend, with the US targeting Iranian radar sites and Iran retaliating against a US base. While President Donald Trump insists Washington is still seeking a deal, Brent crude has reacted violently, surging past $93 per barrel on the renewed uncertainty. This has triggered a brutal whipsaw for the Nifty. Indian equities trapped the bulls. After a promising gap up in early Monday trade, the markets collapsed. The Sensex shed over 300 points from its highs, and the Nifty 50 broke below the 23,400 level, dragged down by heavy selling in PSU banks and FMCG stocks as global geopolitical fears took over. Meanwhile, crypto is eating Wall Street. The line between digital assets and traditional finance is completely disappearing. Crypto exchange MEXC just officially launched RealStocks, allowing global users to buy real shares in US-listed companies using USDT with zero trading fees, a massive shot across the bow of traditional brokerages. This comes as Bitcoin remains under pressure. Bitcoin is bleeding into June. After a fierce rejection near the $77,000 level last week, aggressive month-end rebalancing and ETF-driven outflows pushed BTC briefly below the crucial $73,000 support zone. Finally, we are digesting India's June 1st inflation shock. Domestic consumers woke up to a new inflationary reality yesterday. Commercial LPG cylinder prices were hiked across major urban centers, and major automakers like Maruti Suzuki and Hyundai raised vehicle prices by up to 30,000 rupees across their portfolios. Let us take a deep dive into the collapse of the West Asia peace narrative and how crypto platforms are exploiting traditional market inefficiencies. The data from the last 24 hours proves that you cannot fix physical supply chain deficits with political rhetoric. Here is why the old macro playbook is burning traders this week. Consider the geopolitical bull trap. Yesterday, the market tried to price in President Trump's statements that he was not rushing the process, but seeking a deal to ensure Tehran never acquires nuclear weapons. However, algorithms do not read physical reality. The immediate tit-for-tat military strikes confirm that the region remains a highly volatile flashpoint. The resulting spike in Brent crude above $93 a barrel is a brutal awakening for anyone heavily long on rate-sensitive equities. The geopolitical premium is back with a vengeance. Now look at the great TradFi disruption. While traditional markets suffer from geopolitical whiplash, the crypto ecosystem is executing a structural takeover. The launch of MEXC's RealStocks allows traders to bypass tedious currency exchanges and traditional broker limits, blending real US equity ownership with crypto liquidity. Furthermore, AI-driven platforms like AIX Alpha are processing over 100,000 market signals daily to navigate Bitcoin's accelerated volatility. The infrastructure of finance is fundamentally migrating on-chain. This feeds directly into the emerging market squeeze. Look at the stark reality in India. The Nifty's intraday collapse reveals deep institutional anxiety. Foreign institutional investors dumped over 21,000 crore rupees in equities late last week, and domestic retail is now absorbing the impact of the June 1st price hikes on essentials like commercial LPG and vehicles. With oil climbing and inflation creeping into local supply chains, the Reserve Bank of India has very little room for dovish pivots. Here's the TradeFlow take. The peace trade is officially a mirage. The resumed clashes in West Asia guarantee that energy prices will remain structurally elevated. Do not try to catch falling knives in heavily exposed cyclical stocks. Rotate into defensive commodities, hedge your downside, and watch the $73,000 level on Bitcoin. If that support breaks cleanly, expect a violent flush. Stay liquid, stay sharp. See you on the next one.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.